go ahead and get to Jen Schonberger with the decision from the Fed. Hi, Jen.
Rate hike. The Federal Reserve raising its benchmark interest rate by 0.5 percentage point to a new range of 4.25% to 4.5%. That is the highest level since December 2007. Now, the Fed left it in its statement that it anticipates ongoing increases in rate hikes, implying that it will not pause rates in March. Fed officials now see rates rising to 5.1% next year. That's 50 basis points higher than the 4.6% previously projected back in September. Now, that is the median, 5.1%. 7 officials see rates moving higher than 5.1% this next year, with 5 officials seeing rates move as high as 5.25%, and 2 officials seeing rates move as high as 5.6% next year. Now, after that, officials see rates coming back down to 4.1% in 2024, which is slightly higher than projected and goes along with the higher for longer thesis. Why all of this? Officials don't see core inflation coming back down close to target until 2024. And even at that point, inflation they expect to be out about 2.5%, not back down to 2% until 2025 in their estimates. Now, as far as the unemployment rate, they see that rising to 4.6% next year and holding at that level through 2024. All of these higher interest rates means that the Fed sees lower economic growth on average, just 0.5 percentage point of growth next year, and bumping up slightly to 1.6% in 2024. This decision was unanimous. We will get more from Fed Chair Powell at his press conference in less than 30 minutes' time. Back to you.
Yeah, Jen, taking a look at the market reaction to this, certainly well off the highs. All 3 of the major averages for a brief moment trading in negative territory. Jen, a lot of the trading action that we'll likely see over the next 2 hours is going to be based around Jerome Powell's tone, because we certainly have seen volatility going back to the last several meetings, with investors really looking for any sort of dovish tone to really hang on to and to get excited about.
Yeah, I think that the markets are going to have to really cross their fingers. I don't think we're going to see any dovish tone from Fed Chair Powell. I think he is going to be very hawkish. The fact that we see 50 basis points higher than perhaps 25 basis points I previously thought indicates that. The fact that 7 officials see rates much higher than 5.1%, I think also underscores that. We'll see what the Fed Chair has to say. Obviously, they want to walk that line between not crashing the economy by being too aggressive, but it sounds like the recent CPI data that we've had is not enough to quell their concerns about inflation right now.
Fed certainly has a tough job right now. Jen Schonberger, thanks so much.